Ladies and gentlemen, welcome back to another Bitcoin update. Unfortunately, I think that Bitcoin is in quite a rough position right now. We've just seen a rejection from the volume profile, which has been the largest point of contention on a singular level since March this year, right? That's 28K. We've seen a double top rejection from that region, as well as a rejection from bull market support band. Although that bull market support band rejection is not confirmed, and we do have a chance of reversing it, so there is hope. That rejection is not good, and that's sending us downwards at the moment, spiraling downwards towards a retest of the very important range at 24.5K to 25.7K. So Bitcoin is in a predicament right now. I don't like the look of it. We're in trouble. We're in danger. We need to be seeing some bullish retaliation shortly, or things could get very, very rough quite quickly. Guys, without further ado, let's get into it. Okay guys, the charts that we're looking at today are the Bitcoin range-bound chart. We look at that every single video. We'll continue to do so until it's not relevant anymore. We're looking at the volume profile on the Bitcoin chart since March, since we entered this range. So this green range here in the range-bound chart, this is the range we're in right now. We're looking at the volume profile historically. That tells us quite a lot about this range and quite a lot about why the rejection we just saw actually wasn't very good for Bitcoin, why it was quite bad and quite negative. So we'll look into that. We'll look into daily chart, we'll look into 4-hourly chart, we'll look into the weekly chart, specifically focusing in on that bull market support band and the RSI, but specifically our bull market support band, potentially seeing some similarities here between March 2022 and what we're seeing right now, which is quite bad for Bitcoin. And you'll notice as I go through these charts, the overall premise for Bitcoin right now is we're in a bit of danger here, and we really want to be seeing a higher low. We're looking into long-term holder balance reaching all-time highs, not all-time highs, but highs we haven't seen since 2010. So basically almost all-time highs. And then we're looking at the Bitcoin monthly returns chart. We're meant to be seeing a green October according to monthly returns. As of right now, we are slightly red. So we'll be discussing that briefly as well. Guys, before we get into the video, go ahead and check out the Telegram VIP information group. Now on Telegram, we have a VIP group. It's called Wolves Crypto VIP. We trade altcoins in there on a sub-daily basis. You can check out the information group, which I'm showing on the screen right now for free. And that has the VIP trading results. It has the 14-day free trial kind of information. It has also what you'll get for the group and the prices, etc. We'll be releasing the Q3 trading results very shortly, but overall we have 9 months of trading results released with a 79% win rate in there currently, so that's good. All right, so check that out. Let's go ahead and get into the content. We'll start with the Bitcoin range-bound chart, as we always do. I won't spend too long on it. As I said before, we do it quite regularly. We did it yesterday. I just want to give you context because it's relevant to what we're going to discuss on the Bitcoin volume profile. So Bitcoin has 3 distinctive ranges. It has the range between 18.5K and 15K. It has the range between 24.5K and 18K. And it has the range between 32K and 24.5K. Each of these ranges are color-coded. As you can see, if we get above 32K, we will be re-entering, okay, this range. If we get above the green box, above 32K, we'll be re-entering where we saw basically the vast majority of the bull market returns, and we'll be re-entering a period of pretty high volatility. So Bitcoin, the main objective right now for the bulls is to break 32K. That's the main objective on a macro scale. Break 32K, and we're back in the territory we saw when we were in the last bull market. We're back into seeing quite high volatility, and we're back into aggressively attacking the 40K region. 32K is the critical level to the upside, and obviously to the downside, a similar approach can be taken of analysis, and that approach is looking at where we've seen support and resistance in the past. We've seen resistance at 24.5K on a few occasions. We've seen support on a few occasions. If we lose 24.5K, we'll be dropping back into the orange range, and hence we'll be entering a period of extensive consolidation, which would delay the process for Bitcoin quite significantly and send us into a more bearish scenario. So that's something I've explained quite a lot, and I just want to highlight the main point I was making. The main point I was making is that right now, the current range and the 2 levels within the current range that are very important are 24.5K and 32K. Until one of those levels breaks, nothing really too major has happened on a macro scale. So 24.5K and 32K. Remember those numbers because they're going to be relevant when we get into this chart here. What you'll see is this. We have 32K around here. We have 24.5K around here. Basically, those are the 2 levels. They're marked in pink. Okay, I'm actually going to mark them in blue, light blue for the sake of argument here to make things clearer. And then what you'll see is we have the volume profile on the right hand side of the screen. Now this red line is the POC, which is the point of control. That means this red line we see on the screen here is the point in which in this price range, right, which is the entire price range we've seen in the green box here, it's the same price range, right, since March. In this price range, the point in which we've seen the most historical trading volume, which means the point in which we've seen the most historical contention in the market, right? The hardest zone to break, the most orders have been here, is 28k exactly. What you'll notice is that on the recent impulse we've seen to the upside, we rejected perfectly from 28k on 2 separate daily candle closes, and now we have headed downwards from there. Now that is very bad. That is very, very bad, because what it means is this. It means we gained the momentum for a bounce to the upside. We saw the bounce. We attacked aggressively deep into the volume profile, volume resistance, and we finally got rejected at the absolute peak point of resistance. Now, if Bitcoin managed to break 28k, if we broke 28k, it would all be easy from there, because the volume profile, as you can see, slopes downwards from that point in time, meaning there is less and less historical trading resistance, and so we would be able to break upwards quite easily. But unfortunately, at the last possible moment, literally at 28k at the POC, the last possible moment, Bitcoin rejected not only once, but it came up for a double top and rejected 2 separate times. That is very bad news for Bitcoin, and this is where we get into the Bitcoin situation right now. Bitcoin is now under threat, okay? It's under threat, even though we're still seeing an upwards trend technically on a short-term basis, because we still have higher lows, okay, and higher highs. So we're still seeing an upwards trend. Bitcoin is under threat, right? Because now we have seen a double top rejection from the volume profile. Not only a double top rejection has been seen, but we have also seen, okay, a rejection from the bull market support band. I've just brung up the bull market support band, as you can see on the screen here. We'll look into it on the weekly chart in just a moment here, but bull market support bands are a very important indicator. As I said, we'll look into it in just a moment a bit further, but we actually didn't manage to break it to the upside. We very slow, gradually broke it to the upside here by like 20 USD, but overall it's a fake out. We actually very clearly, as you can see, rejected from it after consolidation. Now we've headed downwards from that. So I don't like the look of Bitcoin right now. I don't think it's necessarily bearish yet, because it's hard to say something's bearish when it's still in an upwards trend locally. I think that if we lose the level here at 26k, that's when we start looking very bad. And I think that's validated on volume profile. I'll tell you what I mean by that. I'll show you the volume profile and explain the situation. So on the volume profile, obviously spikes in the volume profile represent high contention in that region. As you can see, we're in this larger range between these 2 blue lines, and you can see the spikes in the volume profile kind of end at around 25k. Right, so we'll make that a pink line. And the spike in the volume profile to the upside ends at around 30k. Right, so basically, within these pink and blue lines, but within 30k and 32k, and within 24.5k and 27k, we have these kind of regions that have been left largely untouched. We haven't spent much of the time in this range, in those price regions, and that is because they are the bounce and rejection ranges. All right, so let's go ahead and mark that down. So as you can see, I've gone ahead and marked down the rejection range here between 30k and 32k, and the bounce range between 27.5k and 24.5k. Now here's the thing. So they're obviously very strong resistance and support zones. We've seen very low amount of trading volume in those regions, and that's because the price moves very quickly out of those regions when we go into them. That's because there's very strong buying and selling support. So basically, right, I'll explain it one more time. When we have high spikes, high amount of volume on the volume profile in specific price regions, it's because that price region is heavily contested, and hence we have to spend more time there before there is a definitive decision in the market made as to whether we go up or down. When we have low amount of volume on the volume profile, it means that range is definitively bullish or definitively bearish, and hence we don't have to spend much time there before we move up and out of it. So, to the downside, this downside range, this bounce range, it's a definitively bullish range. Whenever we enter it, we generally bounce. And the same thing can be said from the upside range, except this time it's a definitively bearish range. And whenever we move into it, we reject from it. Now, here's the thing. You can only see so many rejections and bounces from the same range before the range breaks. And we've seen 2 separate, bounces from the bounce range and 2 separate rejections from the rejection range. Now, a general rule of thumb in TA is that triple tops or triple bottoms are extremely unlikely. Right now, we have seen a double bottom and a double top, which is unlikely in itself, but a triple bottom or a triple top would be extremely unlikely. Now, what does that mean? It means that the next time we enter one of these ranges, whether it be the bounce range or the rejection range, it becomes highly likely that that range will break. So, what I mean by that is this. The next time we enter this range at 30k, it becomes highly likely we will break that range to the upside and break above 32k, and hence break this entire range to the upside and move into a macro bullish phase. And if we retest this range here between 25.7 and 24.5, it becomes highly likely we break down below 24.5 and we break below the green range and enter a macro bearish range. Okay, so that's the very simple. It's not actually simple, it's quite complicated, but that's my opinion on Bitcoin. I think that right now, as long as Bitcoin, to be honest, is between 25.7 and 30, there's really not really much to say about it other than it's neutral. All right, that's the reality. This is kind of like a middle ground. I've said it before, I'll say it again. It's a no man's land. Imagine this is the English and this is the Germans, and it's World War I and it's trench warfare. This is the no man's land. No one goes over here. That's what's going on right now. We're in a very neutral phase. Now, it is neutral. However, we have seen some bearishness kind of seep through in this recent rejection from bull market support band, because we saw a bounce out of the bounce range, but now we've come all the way up. We've rejected from bull market support band. We've rejected from the POC, and this puts Bitcoin in a pretty big point of danger. I'm not very happy about the Bitcoin situation right now, and the bulls need to do something quickly to avoid some very bearish retests of this region, which is relatively unlikely to hold once more. Now, I would never ever suggest acting before a range is broken. I still stand by that. Just because I think breaking below this pink line would be bearish, it doesn't mean I think you should act on that. I think you should act once we break the range itself. Same thing to the upside. I don't think you should buy here. I think you should buy when we break the range itself. I'm a breakout trader, and that's how I always be, and that's what I think the best course of action for TA is in general in terms of risk-reward ratio. But it doesn't change the fact that, right now Bitcoin is in a difficult situation. It's not quite bearish yet. We still are in a local upwards trend, but we need to be seeing something materialize quite quickly, or this could get rough very quickly. So I hope you guys appreciate this chart here, because this is a chart that's actually very important to my analysis at the moment. This range-bound construction chart with the volume profile, extremely important. Before we get into the second part of the video, which is going to be a shorter part of the video, but it is going to be looking into bull market support band, monthly returns, and a long-term chart on Bitcoin, we'll check out the Bitget and Bingx exchange.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have two exchanges for you guys, two options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on the good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
Alright guys, so welcome back. I want to check out the bull market support band here on the weekly chart. It's probably the most pressing matter we have on the weekly chart and on the long-term charts in general. Obviously the range-bound construction chart I just looked at with the volume profile is very important, but this weekly chart here gives us a different perspective of the same kind of thing. And it shows us what we really need to be doing here, because as I said before, we rejected from bull market support band. That's not good. It's very clearly a point of contention, otherwise we wouldn't have rejected from it. And right now, we have to really understand what this is first and foremost. First and foremost, it's made up of the 20-week SMA and the 21-week EMA. You can see it holds very strongly for support during bull markets, holds very strongly for resistance during bear markets. That's very clear. We've seen this happen over and over again here. And as of right now, we've come upwards and we've seen just a gradual, we barely broke over it the other day, or the other week, I should say, 2 weeks ago. We barely broke over it. And I said that was a breakout. Unfortunately, it wasn't really truly a breakout. It was only just at basically 20 to 30 USD over. And the next daily candle open actually didn't really open when we needed to open. We opened within the bull market support band. So it wasn't really a breakout. It was actually more of a rejection we saw. And it was a very strong rejection too, because we saw a green candle into it, a bearish doji candle, and then we're seeing a red candle right now, which if successful in this red candle would form an evening star candlestick formation, which is generally a formation of reversal, which means we generally go downwards from it. So that's not good. That's really not good, because we saw the exact same formation form over here during March 2022, during a big dead cat bounce in March 2022, from 33k all the way up to 48k. That's a huge dead cat bounce. The top of that dead cat bounce was marked by a bearish evening star candlestick formation right on top of the bull market support band in a similar fashion to what could be happening right now. So we need to avoid that at all costs. And how do we avoid that? Well, we avoid that by, in the next 3 days and 23 hours until the weekly candle close, we need to get back within bull market support band. We cannot see this candle close below bull market support band. It would not be good for Bitcoin at all, and it would basically lead us into a retest of support and potentially a breakdown. So I really want to emphasize this. Bitcoin needs to break back into the bull market support band this week. That's the truth. That's what we need to do. We have to do it. If we don't do it, it's in a very rough position. Bitcoin's not in a good position if we don't do it. We don't want to be seeing a top of the local move with a bearish doji candle and an evening star candlestick formation and a rejection from bull market support band and a rejection from deep POC on the volume profile on the daily chart. That would be brutal. So Bitcoin, further emphasized by that chart, is in a bit of danger right now. Now, macro scale, just to move on from there, macro scale in terms of, on-chain charts, Bitcoin long-term holder supply is still increasing gradually. We've reached all-time highs we haven't seen since 2010. And it's not even shown in this chart when the all-time high was, but basically we've reached all-time highs we haven't seen since 2015, and we've surpassed them very slightly. So basically the long-term holder supply as a percentage of total supply is reaching highs, which is great to see, but it's natural. It should be trending upwards, and it's doing that quite well, which means that more people are holding than ever, and that's probably because more people are waiting for the ETF decision than ever. That's probably the truth of the matter. We've seen massive neutral price action for 6 or 7 months now. Why is that happening? It's happening because people are waiting for the narrative to shift, or they're waiting for the narrative to be confirmed. Right now, there's a very strong bullish narrative on Bitcoin. The bullish narrative is the ETF news and the ETF rumors. And basically, when that narrative is rejected or confirmed, Bitcoin will be moving out of the range. That's an easy way to look at the range right now. And you think, why are we seeing sideways price action for 7 months? You don't just see that for no reason. You don't see neutral price action for 7 months. It's not natural. You don't see a double top and a double bottom in the same price range over that long period of time. It's not natural. This is not really natural price action. It's natural in a certain sense, but it's also not natural in a certain sense as well. It's only really happened like this. We've only really seen this much consolidation, this much sideways, because of the fact that people are unsure about what the narrative is going to develop into. There is massive contradictions. A lot of people are bearish, a lot of people are bullish in regards to that narrative, and long-term holder supplies hence increased because of it, because the people who are holding Bitcoin are not willing to sell until they get some clarity on the narrative, and that's the reality. So that's why holder supplies increased, and hence volatility has decreased because there's less supply to trade, and yeah, that's why the price has gone sideways. That's an explanation of what Bitcoin's actually been doing from an on-chain perspective. And the last thing I want to look into is October. October generally is a very green month. Okay, we've seen 8 out of the last historical 10 Octobers be green, and out of the red ones, we've only seen, a 3% red month and a 12% red month. So only like one of the historical Octobers, and that was 9 years ago, has been significantly red, and the rest have been pretty significantly green. And so that could be an indication that October will be bullish. However, right now, I will be honest with you, we're not really seeing that reflect in the price charts. We're going to have to see something switch very quickly if that's going to be true, because right now, the price chart's actually in danger. It's in quite a lot of danger. I don't like the look of it. I will be monitoring closely. And that's overall what I wanted to say in the video. So I think we're done now. I think we're done with the video. POC rejection, bull market support band rejection, threatening the upwards trend, threatening re-entering a bullish support range. But, it's been well tested, so it could break to the downside. A lot of threats going on right now for Bitcoin. I don't really like the look of Bitcoin right now, I'm going to be honest with you. And I really want to be seeing the bulls do something to salvage the situation. Otherwise, this is going to get very, very bad within the next week or so. So hopefully we can see something over the next few days from the bulls. We'll have to wait and see. Guys, thank you for watching the video. I hope you enjoyed. Check out the Crypto Academy Become a Trader 10-unit course. In the course, you will learn how to become a trader as per the name. You will learn market psychology. You will learn market patterns, technical analysis, indicators, patterns, how to find trades, investor strategies, tools, fundamental concepts. Everything is on the website. You can read up all about it, and you can ultimately throw us an email at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant payment information. Guys, thank you for watching the video. I hope you enjoyed it, and I'll catch you in the next one. Cheers.